Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So as we said last week, on Friday in particular, it's 28.65, 28.85 probably will be the sale of the week. And just because of the two reasons. First is the existing target on the daily chart. This is inner to butterfly EBCD pattern with the XOP here. Also it's 127 extension on the butterfly itself, and it's overextension. So market is at the overbought. It's on the weekly chart, is on the daily. And currently the actually reasons for the pullback are rising. So if we even take a look from the technical point of view, this is not only about the overbought on the weekly, on the daily, and some local targets. 28.60 is the all-time OP. 29.45, this is the yearly pivot resistance one. As you understand, on the big scale, if we take a look at the yearly chart, these two levels stands mostly in the same area. So $90 difference is not really big for quarterly chart or even yearly chart when you consider these levels. At the same time, they have the really important meaning. For example, pivot resistance one, it's usually the level that triggers significant pullback. So it works like the resistance where the overall global range is set between the pivot resistance one and pivot support one. The breakout of this level means that currently gold stands in a long-term tendency and it will continue. So it tells that the current action is not just a retracement of some big downside action, but it is self-sufficient, bullish long-term tendency. So, and we're actually coming to this area. Even moderate pullback based on a yearly pivot resistance one, it might be really significant on a daily chart. Besides, the yearly pivot point has not been tested yet this year, and very often market retraces from the pivot resistance one to the pivot point. It doesn't break the tendency, but this is natural reaction on the pivot levels. So, and as close as we're coming to them, as more chances, at least based on the technical picture, appears for retracement. What we could say in the nearest term that the upside action probably should slow down. It's because of the overbought situation as well. So really might be some reaction on the market in the nearest term. But this is big picture, so if you would like to read the detailed analysis, you could find it as usual in the weekly report. Now let's see what we'll be watching, dealing with on the coming week in the shorter term. So on the daily, we see that both targets are completed. Nearest support area, at least the major support, stands at 27.70, and actually it's retesting of the previous top. Well, oversold daily oversold stands approximately in the same area, so when the market will start downward action, if it will start, oversold will creep slightly closer, and you will see it around the same level. So we could say that somewhere around 27.70 probably will be the floor. If the pullback will start, that might be the bottom on the coming week. Overall trend remains bullish, so we see it on all MACDs on all time frames. But for now, on a daily chart, it's not many things to do. So if you trade on the weekly on the daily chart, it's not the point for taking new long position, but you can't take the shorts as well, just because you don't have any clear bearish signals. That's why for long-term traders, probably it will be, well, some pause in activity in nearest time. If you keep the long position, you probably could think something with them, but well, we said that probably this will be the level where it makes sense to think about tightening the orders or stop orders, or even think about closing the positions since the very important achievement have been made here. So in the beginning of the week, we will be focused purely on the intraday trading setups. And this is only for those who are ready to take a bit more risk in the current circumstances, because this is only kind of the early reaction on the patterns that we have on the hourly chart. What we have here, we actually have reasons to consider downside action. First is, as I said, targets on the daily. On the intraday charts, we have hint on the possible double top pattern, right? Clear wash and rinse on the top of the second top, and all the stuff accompanied with the bearish divergence. This is great background to consider scalp short position. So if we'll be correct on this suggestion, as probably its target will be around 27.85, 27.86, based on the classical approach for estimation of the double top target. So if you would like to try to trade this trading setup, pay attention to what we have here on the second top. You could see that on the 15-minute chart, we could get nicely looking hand shoulders pattern. So for the minor pullback somewhere to 28.70, this might be the right arm to be formed, and that might become the point where you have to make the decision on a short entry. Your invalidation point will be above the top. So minimum target will be the neckline of the double bottom pattern, but potentially it might be significantly greater, as we said. If by some reason we still will see that gold is breaking up the top, it means that probably we will get no reaction on the current targets, and market will stay aimed on the next destination point, which we have around 29.45 area. This will be 1618 extension of the butterfly. So this will be the next point to consider. But our prediction probably will become slightly slower. It's because of the overbought condition. So even on without the hand and shoulders, you could see that here we have nicely looking bearish engulfing, which mostly takes absolutely the same shape as the hand and shoulders pattern on the lower time frames. That and towards what we have, let's start from this setup and see what will happen with them. If we will trade it until it will behave as it should. So once we will see some deviations from the normal behavior, or if we'll see something wrong with it, it's probably we will find something else, and it will be probably already in the opposite direction. But while it's working and it's developing, why we should ignore it and actually do not try to use it for possible trades.